All right, here we go. Everybody, this is Rob Keens at goldsilverpros.com. I have a very special returning guest of the program. It is David Morgan of the Morgan Report. David, how are you doing this Friday?
Rob, I'm doing good, and thanks for having me.
Yeah, absolutely. Love to have you on because we like to talk silver and the precious metals and the general economy, and I think you do a great job of that. When I first came to the precious metals, you were one of the first people that I gravitated to about 10, 11 years ago, and you really helped me understand them. And so I appreciate everything that you've done, the books that you put out, and your newsletter as well.
Well, thank you for the compliment. It's appreciated. I've certainly got my detractors, but I do the best I can. I'm only human. I make errors, but yeah, my heart and head are in the right place. I definitely want to educate primarily. Then, as you've heard before, my mission statement is to teach and empower people to understand the benefits of an honest financial system. It's pretty simple. The words silver and gold aren't in my mission statement. We could, in theory, have a honest system based on paper. It's never worked ever. But nonetheless, in theory, you could, if you had a one-to-one correspondence with the amount of pieces of paper printed corresponded exactly to the physical reality world in the physical economy. And that's a rough estimate. It's a little more complicated than that because you need to have credit and everything else. But nonetheless, the idea is gold and silver are the ones that have shown to be the best. But again, they aren't perfect either because of human nature. I didn't mean to go down this tangent too far, but one of the earliest speeches I ever gave at the Silver Summit, in fact, it was the first Silver Summit that I ever spoke at. One of the professors started to confront me about how bad the gold standard was, and it failed. And gold's a miserable way to run a monetary system. Right in the middle of my speech. And I was kind of rolled back on my heels, didn't expect to have a confrontational setting. And so I told the people in the audience, I'm a deep thinker, not really quick on my feet kind of thing. Let me dance around a little bit. And I did, sort of just jokingly. And I said, you know what? It's not gold. I mean, gold's an element on the periodic chart coveted by people for thousands of years as a means of exchange. And that's what the people have decided. So gold by itself is just an element. It's because man is involved. And if man puts out more receipts than there is gold to back it up, and you have a bank run, it's not gold's fault. And the audience started clapping like crazy. And he got so upset with me. Anyway, I didn't mean to digress too far, Robert, right. But there you go.
So we've got something we want to talk about here in a moment with regard to Russia, but I want to actually start off on the potential shortages in the market. So we had John Adams talking about potential shortages at Kitco and at the Perth Mint. We had a CFA contact us, as Daniel Gagario, who works out of the UK, who had actually audited Perth's financial statements from 2013 to 2020 right off of their published material. We did a couple of videos on it. He showed that right now they're running a net short position in the precious metals to the tune of about, I want to say almost $900 million Australian. And they've also borrowed $6.5 billion in precious metals, and that's a liability. So a tremendous amount of exposure, not only the precious metals exposure, but price exposure, price risk sitting at the Perth Mint. So we've got that, and then we've got reports, Ed Moy coming out last month saying he thought most of the mints, the Canadian, the US, and the Perth were probably out of gold at this point, and probably, I would assume also silver. So all these reports of the big mints starting to be out. Are we in a shortage situation with the precious metals, or do you think that there's still enough precious metals out there for anybody that has, deep enough pockets that wants to get it?
It's a real tough answer, and it's so it's going to be a long answer, so bear with me. Okay. First of all, I'll go to the U.S. Mint, and I put out the print that they did. The Mint put out that said there's a global silver shortage. It was underlined. I cut and pasted that, put it on my Twitter feed, and put about 5 question marks behind it, indicating I was questioning the statement. Interestingly, and I can't give out all the details for anonymity purposes, I have to, respect my sources, but I actually got a phone call from someone quite high up in the silver world that definitely knows what they're talking about. And said, I saw what you put out on Twitter, and I didn't know these people followed me, to be honest with you. And they indicated that they wouldn't retract the statement, but don't be surprised if you see an alternate statement clarifying what they put out. So from that aspect, which it did happen, the Mint basically said, look, it's really a blanks problem. It's not a silver shortage problem. And from that tiny perspective, I'd say that's true. And, I'm pretty good thinker, Robert, and not everyone agrees with me, but think about this. The annual market for silver on a mining basis is 800 to 850 million ounces annually. The Mint in a good year sells about 40 million ounces of silver eagles. So that's 5% of the market. So if you were going to do an audit, how would you weight somebody with 5% of the balance sheet versus someone with 95% of the balance sheet? Mm-hmm. I think you see my point. I'm not saying the Mint doesn't know what they're talking about, but you can hear the inference there and take it with that. Now, and I addressed this in the latest Morgan report, which I'm publishing this weekend. Not saying you have to buy it. I'm going to give you a lot of it for free right now. I have said for years, at least a decade, if not 2 decades, that if you went to the Los Angeles Coliseum and you put a red line down the 50-yard line, and you put all of the claims on silver on the right side looking north and all the silver on the left side, they wouldn't match. Mm-hmm. And they wouldn't match by a very, very, very large amount. Okay. So I'm going to stay with that statement because it's true. Because as I put in the Silver Manifesto, so I'm talking my book, but I'm also verifying and being consistent that there is a lot more claims on silver and or gold than there actually exists. So that's a fact. Now where it gets a little bit of a semantics game, and I don't want to play games, but is there a shortage? Well, let's look back in history and talk about a quote unquote shortage. I'll call it a deficit. I think a deficit's a better term, but from 1990 to 2006, the above ground stockpile of silver, and I'm talking 1,000-ounce bars, that's what the silver market's based on, went from 2 billion ounces down to 500 million. So in those 15 years, we had a deficit of 100 million ounces average on an annual basis, and it got sucked out of the above ground supply. So supply and demand has to meet every year. And price is supposedly going to make that happen, and we could talk about that more. Mm-hmm. So now we're down to 500 million ounces, and then the mining industry really took off in the early 2000s because of China going full bore to build out their entire nation. So from 2006 to present day, we have rebuilt the above ground stockpile of silver beyond 2 billion ounces. So if you look at it, I would say objectively, we had a deficit for 15 years. Now we've had a rebuild for 15-ish years. And so what does that mean? Well, you can have a shortage if you have an increase in supply because the demand exceeds the supply. So, think about it like a stock. And I think most of our viewers are sophisticated enough to know you could have a large cap stock, which, a multi-billion dollar company, but that's so tightly held that the float, the available amount of stock is so tiny that any new buyers bid it higher and higher and higher. That's just true of any market. And the silver market's no different. So I think to summarize, Robert, and I hope I'm making sense and I hope I'm helping people because that's my wish, is that the silver market's much tighter than the price would indicate. I think and believe and can verify somewhat that the silver that is held now is held by very, very strong hands. And so again, that goes back to the float analogy that the float on the silver supply is pretty tight. And I think the pros know it. I think the banks know it. I think the shorts know it. And And so that's it. So hopefully I clarified it. I'm not trying to split hairs. I
Mhm.
think the mint is probably not the most reliable source to look at the global picture of silver.
Mhm.
Not that I am, but I do take into account the perspective I presented.
Okay. So based upon past history of silver and your knowledge of it, do you think, what's it going to take to pry that silver out of hands? If we do have some stocks but it's in strong hands, is it a really higher price? Is it some sort of event in the economy? When do you think that silver starts flowing again?
Boy, that's really hard. I mean, this is opinion. I think it's a combination. I think it's a wake up call in the inflationary environment. People seek safety or something they can trust. I mean, what's more trustworthy than something that stood the test of time for thousands of years? Gold is what's going to be touted, but silver is more affordable, and people that are of modest means will rush into the silver market. So I think that's part of it. I think the other part of it is education, which people like you are doing. And then we've got the Wall Street silver crowd, which is a whole generally new generation that's woken up to the fiat money paradigm and understand that real money is reality. And this other stuff is basically a paper paradigm that you're sort of, excuse the expression, brainwashed to believe has value. So as that becomes more pervasive, and I mean, that group, that WSS group's growing at, I don't know, phenomenally. I mean, it started with 30,000 and now I think it's pushing toward 100,000. So it's education, it's inflation, it's fear, it's distrust, moving to something trusted. And then it may or may not, but most likely, in my opinion, will take some type of quote unquote an event. That will be what really is the tipping point. A mint that can't, not necessarily a mint that can't produce, because they can always say it's a fabrication problem, but a bank that can't deliver, COMEX saying we're not defaulting, but from now on for the next quarter, all settlement will be done in cash only per the contract. But no silver's being delivered. So something along those lines. I mean, I could guess 3 or 4 different scenarios. Probably none of it will be probably different than anything I state, but the idea is sound. There'll be some type of obvious to the educated, precious metals educated people, that the general financial markets will obscure with some kind of rhetoric that, oh, no, that's not really what they said. What they really said is that blah, 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 blah. But those in the know that understand how markets work and what the silver market really looks like will get it. And the truth will win. I mean, the truth doesn't have an agenda. It's not like it's left or right or up or down or black and white. The truth is the truth. So the truth usually comes out. And so I think that's it, Rob. I think it's best I can give you that it's probably going to be a synergistic effect of multiple vectors that come together at about the same time.
Okay. I think you had a piece of news you wanted to share on Russia and how they're treating the dollar. Maybe we should talk about that now. I think it's pretty astounding news that we saw come out.
Yeah, well, thank you for that. Am I sharing my screen?
Yeah, we can see it.
All right, this was on Kitco News yesterday. We're doing this interview on Friday, the 4th of June. And this is amazing. I won't read the whole thing, but it's a very short article. Russia's wealth fund, so it's not like their national bank, but Russia's wealth fund to ditch all US dollar assets. That's pretty powerful. For gold, euros, and yuan this month. So if you read the article, it says that the Russian National Wealth Fund is basically going to abandon all US dollar assets, increase their holdings of, again, gold, euros, and the yuan. The sale of US dollar assets will take place within a month. Furthermore, after the announced changes are implemented, the fund will hold 40% of its assets in euros, 30% in yuan, and 20% in gold. This would mean selling 40 billion for gold, yuan, euros, the economist said, the ING economist said. So is this like, half the world's money supply? No, 40 billion in today's world is not the, it's a big number for a personal investor, but in the scheme of the $1 trillion currency markets, it's not huge. But I think the idea that they're publishing a fact that they're de-dollarizing at 100%, is significant, Rob. So I just want to bring that to everyone's attention. And then I want to add on to that too. There was a missive by my friend Hugo Salinas Price earlier, I believe, the same week, that talked about Putin wanting to have a gold-backed ruble. And you can correct me on this, Rob, because I only read it once, and it inferred that China might go along with it as well. And then if I read the article correctly, the international bankers basically put the nix on it. And so they basically held off from doing it. Now, it was implied, I can't source it, and I love Hugo very much. I mean, we're very good friends, and I've always honored him. He's, if there is a real silver guru, it's probably him. I mean, he's done more to advocate silver for Mexico than anybody by far, and done as much as me, if not more, to advocate silver's return into the monetary system. Having said all that, I have to be fair, and I couldn't really verify what he said in that missive, but the implication of it is startling to think that a nation state might want to go back to a gold-backed currency.
Yeah, I saw that as well. It was on, and I'll post the link in the video description. I have to go look it up. I don't have it handy, but I saw that on oh gosh, what was it? Plata website. I have to go and look. And that was pretty astounding. I think we've all thought that this may be happening with some of the BRIC nations, but for them to actually go out and publicly say it means that they probably have already their planners have already anticipated the potential response to this and how it may affect their holdings and how it may affect their economy. So in other words, they've already done a lot of stuff so that when they release this in the news, it doesn't negatively impact their own economies in doing it. And that means they've been thinking about it for a while. And this is something that we have talked about for many years, what happens when people start, dumping the dollar. So I guess, David, we're in this phase in which it's the end, of the dollar as we know it, relatively speaking. Could go for a few more years. What do you think emerges out of that? Are we going to live in a multipolar currency world, or what's coming after that?
Well, I wrote about it rather extensively because I've been studying it for some time. And, I'm pretty clear on what they want and who's they. It's the international banking elite. And in that month's issue, I put a lot of reference to Mark Carney because he's kind of leading the parade at that time when he was working with the Bank of England, which he no longer does. And he gave basically the same speech at Davos, now known as the World Economic Forum, Jackson, Wyoming, which is where the Fed meets, and the UN. And the same speech was that we are going to go to a central bank digital currency backed by absolutely nothing with modern money theory, and you'll like it. That was basically what it said. Now, if that's what they want, does not mean that's what they will get. So as you mentioned, Rob, I mean, I think you're very accurate. I think the BRICS have been trying to remove themselves from this dollar domination for quite some time. And just like in the crypto world where you have, precious metals backed cryptos and cryptos that are backed by lumber, some are backed by cobalt, some aren't backed. I think you have, a smorgasbord of alternatives that you can participate in. And we may have let's say a gold-backed BRIC currency as an example. I'm not forecasting that, but it's obvious to me from the start when I reported on it very early in the Morgan report about a gold-backed yuan, and then what the BRICS were doing, that they want to have the availability to be outside the Swiss system and be outside of the US dollar domination. Whether they pull it off remains to be determined. So I gave you what they want. How it manifests is going to be extremely interesting because I think that's part of the currency crisis. As Jim Sinclair and Bill Holter have stated, and I don't want to misrepresent him, I'm sure Bill will get a hold of me if I'm messing this up, but there will be a proposed implementation that won't work. And then there'll be backing and filling, so to speak, and there'll be a second round, which will probably include some kind of a tie to gold for, I wouldn't say transparency, just for legitimacy. to get people to accept it, to be trusted. So it's up in the air. It's not, the bankers are doing God's work. I put that in quotes. I think people that are sophisticated know what I'm talking about, because that phrase has been used by the elite bankers. Mm-hmm. But that doesn't mean they're all knowing and all powerful. It really doesn't. So we are in such interesting times. I think the best thing is to have a hedge, have physical metal first, where you can touch it. And then if you want to adjunct into the mining shares, or, precious metals backed cryptos, or cryptos in general, or real estate, or whatever, that's fine. But I think you're going to really do a disservice to yourself if you have any savings to not save some of it in real metal.
Yep. I want to switch topics here for a second to Basel III. I know that's been going around a lot on the internet. We've looked at it, I don't know how many times, maybe 4 or 5 times on the channel, and specifically the NSFR and how that relates to the London gold market, and Alistair McLeod's come out and said he thinks it's going to end the LBMA. I didn't know if you had been following that sort of saga at all, and if you had an opinion on Basel III. Do you think it's going to change things in terms of the power centers in the gold market, or what effect do you think that could have?
Yeah, I mean, at the risk of looking, wrong and maybe even dumb, I did read it, and then I got with people that also read it that I trust. And I personally, first of all, I don't know. So let's just be crystal clear. I don't know. Okay. After reading it, I think it's going to knock some of the players out of the game. So the trading desk for some of these banks will be like Scotia. They'll just say, hey, we're done. We're not going to trade gold anymore. But I don't think it's going to have a massive effect on the price. I think the market's already built it in. And I don't think it's going to cause a great deal of consternation in the unallocated accounts. So I could be wrong, but I've read it. Again, I've talked to 2 people that are pretty high up in the world in the precious metals that basically verified how I interpreted what I'd read. And so what remains to be determined, we'll find out, by the end of June. And the one area I do have to comment on further, Rob, is I don't really see how it spills over in the silver market. I mean, it's making gold a tier 1 asset. Silver isn't in this at all. And the problem with the silver market is it's bulky relative to gold, but it's not bulky at all. I mean, as I've done many times, and I'll do it again, I mean, that's a kilo of silver. And what is it at today's price? Roughly $1,000. And that's my cell phone, which is about the same size. And I defy anyone, unless they collect fine art, rare coins, or rare stamps, to show me anything with that small a volume that's worth $1,000 other than their cell phone. So it really isn't that bulky. Now, if you're wealthy and you could collect, thousands of those, then yeah, it's going to take up some space. But it does cause more of the silver market to go into the paper side than gold. Gold is such a high unit value per volume that most people, even the very wealthy, will take physical possession or take it and put it in a private vault or whatever. Not that there isn't gold stored by the banks, but I'm talking about, but in the silver market, if you put the amount of currency in the silver that a lot of people put in gold, you want to store it somewhere. And that's fine. I mean, I'm very familiar with the storage facilities and which ones I trust the most and that type of thing. But it's very well known that a lot of people that are not that sophisticated see these unallocated accounts. They don't have to pay for storage. They're going to have quote unquote silver, and it's easy and it's done on the internet. And you throw your, cash or your currency in there and you got exposure to the price of silver. Now, in some cases, you could change from the unallocated to allocated and get the metal sent to you and everybody's happy. But believe me, there's an oversale, as John Adams has pointed out time and time again, of the amount of unallocated versus the physical market. And that's why if you have like a Perth Mint certificate, what you have is a Perth Mint certificate. Get it through your heads. It's pretty simple and pretty clear. You own a certificate. You don't own the silver. And the only way to own the silver is to take that certificate and cash in for real silver. And you know what? If everybody did that, I'll bet dollars to donuts there's not enough silver to make good on them all.
No, there's not. We actually analyzed their financial reports along with the CFA, and we proved that they don't have all their gold and silver. So it's no longer speculation. We know it. And for them to get the silver, it's going to be about almost $1 billion Australian for them to catch up. And hopefully there's not a run, because I know that some people could get hurt in that. And hopefully, people hear this and they understand what pooled and unallocated accounts are, and they consider that as part of their financial plan. Is that really what they want to hold for price exposure, or do they really want the fiscal, and to make their choices accordingly, and plan ahead? And that's why we do all the research we do, and then bring you on the show and talk to other experts so that people can get that information. David, how do people reach you if they're interested in your newsletter, your books, and your information? Where can they find you?
That's quite easy, Rob. You just go to themorganreport.com, get on the landing page, give me a first name and an email, verify it. We get our free newsletter. That's for everybody. And then on the paid part, there's a premium service. You can hit the subscribe tab and read about it. There's a small video there. And there's a books tab if you're interested. The book's the best deal if you're interested. The Silver Manifesto is fairly academic read. It's sort of a Bible on the silver market. And it touches on everything. I mean, it'd be an investing handbook, but it's focused on silver. And then the last book that David Smith and I wrote, called Second Chance, how to make and keep big money during the coming gold and silver shockwave, has a lot to do with investment strategies to keep yourself in the market, to try to pick the very top without getting hurt. So several methodologies to make sure that you profit. And I know, to look you in the eye, Rob, and say, well, wait a minute, David, are you saying you're going to actually cash out silver for fiat? And the answer is, I don't know. Depends what the market shows. I mean, my strategy right now is to have a plan of switching fiat into another asset rapidly. In other words, I sell my, half my silver at this point because I think it's going higher, but I'm not so greedy as to not take a profit. I take that and I buy, it goes to my bank account, and 2 days later it's in escrow for land or an apartment or whatever. So I don't think you want to stay in the fiat thing as the currency is being destroyed. And that's the most likely scenario right now. And of course, there's direct contract. I mean, you could say, here's this many bars of silver for this many acres of land, or for that apartment, or whatever. In fact, that's what happens. That's why having price exposure in an unallocated account may sound good until you really need it. And when you really need it, the people that have the actual metal, that's why you hear these stories that most people, even some of the sophisticated people, don't really know about, that one of the ones, and it's maybe just in the metaphor, but it makes the point that a bellhop was given, a gold coin well before the Weimar Republic, and then during the Weimar Republic was able to buy back the hotel for the same gold coin. But they weren't going to accept the renting marks, no matter how many wheelbarrows full he had. So you get my point, that real money in certain times. This isn't like, oh, David, you've been saying that for 20 years. We're so sick of hearing you say that. Blah, 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 blah. Okay, fine. But it's not over till it's over. And the event I'm talking about is not a currency reset every 40 years, like some of my friends say. This is an event that takes place every 350 to 400 years. This is a monumental physical change of the economy, where we know what the bankers want: central bank digital currency. So they want more fiat, and fiat frenzy fiesta forever. That's what they want. There's the alliteration. And then there's the reality. So it's interesting times, challenging times. You don't bet the farm on the precious metals, but again, having some is probably a touchstone that most people should consider.
Yeah, I agree with you. Thank you so much, David, for coming back on the program. We appreciate it, as always.
Rob, thanks for the in-depth questions, and thank you for the comments on the what's going on with the Perth Mint. I think people need to know, with your background as an auditor, that you're a numbers guy and you know how to crunch down and read them, and that we're not making this stuff up for emotional upheaval. We're telling the truth so people can make better decisions.
Agreed, 100%. All right, David, we'll talk to you again. Thank you so much.
You're welcome. Bye-bye.